What is going on, investors? Hopefully, you guys are doing well out there. That is right. It's time for the weekend. That means it's Friday, and that means it's time for the FAANG Stock Recap Show, where every Friday we recap all the major news of all the major FAANG stocks, including Microsoft, Tesla, NVIDIA, and Netflix. On today's show, we're going to kick things off like we always do with Facebook, otherwise known as Meta, and this is the last week we'll refer to this company, I guess, as Facebook. Start of the week, closer to 193. I'm seeing in the after hours, basically trading right around 194, 195, so about flat on the week. That comes on the heels of actually pretty bad news. Sheryl Sandberg deciding to exit her COO post after nearly 14 years. Now, I saw a lot of rumors of why this happened, the timing of this, the fact that Facebook's kind of in this transition. We'll talk about how they'll change their ticker next week. She is getting married. She's well connected politically and also in the business world. We'll see where she ends up. But for the meantime, she remains on Facebook's board and should have a relatively large part still in the company, just not necessarily the day-to-day operations. Now, Snapchat, Pinterest fell as Piper Sandler downgrades over ad concerns. You really think so? This is on the heels of obviously last week. Snapchat kind of pre-announced the fact that their earnings were going to be pretty bad in the upcoming earnings, and we saw that stock just absolutely get decimated. I mean, this thing's down under $15 per share. Pinterest under $20 per share. I think there's going to be some excellent opportunities to invest in kind of online advertising. I don't think it's going to come next week. I don't necessarily think it's going to come maybe a month or even two from now, but you will have some opportunities here. Now, Supreme Court blocks a Texas law that looked to restrict social content moderation. This was a Texas law that I think kind of believed that maybe content platforms like Facebook and Twitter and maybe even Google censor content that they don't agree with necessarily politically, or maybe aligns itself with maybe kind of the mainstream narrative. The Supreme Court kind of blocks this law. We'll see how this turns out for all these companies. Obviously, moving into an election season, things might get a little heated with a lot of these social content sites. Now, Facebook's getting a new name. We were expecting this sometime, I think earlier this year, or maybe even late last year, but they're going to change their ticker to Meta starting on June 9th. Now, Meta is set to join Broadcom's $1 billion custom chip customer club. This is according to JP Morgan. This has not necessarily come as a surprise. I don't think this is as necessarily as bullish for Meta as it is for Broadcom, but it also shows that Meta is really transforming into this company that used to be, quite frankly, just kind of a website and an app, and now is starting to develop more kind of hardline products. Now, speaking of hardline products, maybe the king of them all, Apple, started the week at $148 per share, ended roughly flat, down a couple bucks, down to about $145 per share. Now, Apple is seeking to improve worker schedules at their retail stores. This is obviously on the heels of that strong unionization effort. That's hard to say on a Friday, but we're seeing that across Starbucks. We're seeing it in Amazon. We're also seeing it in Apple. And here's some of the changes. So as a part of the changes, Apple will reportedly institute a minimum 12-hour between shifts, up from 10 hours. So if you worked a shift the day before, you can't be scheduled until another 12 hours later. It was up again from 10 hours. A maximum of 3 days per week when employees work past 8 p.m. unless they work the late shifts. No scheduling of more than 5 days in a row, down from 6, though exemptions may be made. And full-time employees get a dedicated weekend off each 6-month period. Maybe I'm old school. Maybe I'm becoming like one of these grizzled old men, but I was up until 1 a.m. last night working on a project, and I was up again at 6 a.m. feeding my boys and taking care of my kids. I tell you what, if you attune to this type of thing where you can't work 2 days in a row without 12 hours of a break, or you can't work more than 5 days in a row, guess what, folks? You are going to be middle class at best in society. I'm not trying to be rude. I'm not trying to be mean, but if you want to be exceptional, if you want to be exceptionally rich, don't follow to that type of work schedule. Obviously, though, if you work for Apple, might be beneficial for you. Now, Apple's slowing App Store growth could lead to weakening service revenue, and that's not good, because when we look at this services revenue over at Apple, it's one of the fastest growing from a revenue standpoint, and it has the highest gross margins that we quite see, not only over at Apple, but in the stock market as well. This sent the stock down actually quite a bit today, this news, and we'll see if this materializes in the coming quarters and the coming months and years ahead over at Apple. This kind of piggybacks on a story that we talked about really over the last couple of weeks, but Apple is looking to shift a portion of its iPad production towards Vietnam. I believe last week we looked at a story where they were shifting production of their headphones to Vietnam as well. This is good if you're an Apple shareholder, just because, again, no offense to China, they've done a really nice job scaling up Apple's business, but there's a lot of health risks there. There's a lot of political risk. There's geography risk. There's all kinds of risk focusing all your production in one country. And I really like, as an Apple shareholder, they're starting to diversify away from that. Now, Apple likely to benefit from improving supply chain. So according to Webbush, this is kind of a tailwind behind a lot of these companies. Okay, we're still seeing just mass. I mean, if you follow Tesla, if you're following Apple, there's just a lot of supply chain disruption, still a lot of delays, still having to use a lot of air shipping and just nothing running at full capacity. That is a tailwind to this industry. Now, when it's going to clear up, if and when it gets back to like 2019, 2018 levels, if that's even possible, that certainly will be beneficial for Apple. Now, Apple's mixed reality headset likely to launch in 2023 and not at the upcoming WWDC, which is the Worldwide Developer Conference, which is held next week. It is still not an in-person event where they have traditionally announced some products in the past, but analysts believe that this mixed reality headset is not ready and will be announced at a future date. Moving on to Amazon. Hello, gains. This one went from $2,329 per share all the way up to $2,450. It was even higher than that. It was up to $2,500 earlier this week. Now, we also saw a departure, just like with Facebook. Amazon CEO of Worldwide Consumer, Dave Clark, he resigned, and he said in a tweet, I thought it was maybe a little bit of a dig. He says, and I quote, "I've had an incredible time at Amazon, but it's time for me to go build again." So maybe he's trying to imply that he hasn't had to build anything over at Amazon. Could be bad news for Amazon trying to hire new employees that are really actually trying to build and drive things. We'll see what happens in the future, but not necessarily a bullish report over at Amazon. Now, their apparel store concept down in Southern California is the latest headwind for the mall sector. I just thought this was interesting. This is ironically enough for Amazon, the growth area for Amazon's e-commerce business, or better said, its retail business, is actually physical stores. So they opened this store. It's a fashion store, has over 40 fitting rooms with touch screens and all kinds of stuff that might enhance the experience there. That's Amazon's opportunity actually to expand its retail business, is actually to expand into physical stores, while the advertising business and obviously the AWS business will be where the profits are in this company. Now, Amazon is viewed more cautiously by Jefferies on consumer spending concerns. You think? Certainly we're starting to project out like a quarter, 2 quarters, 3 quarters. Everybody's starting to jump on board that a recession is coming. We'll certainly talk about that in relations to Elon Musk's comments today. But a lot of people have a bad or a super bad feeling about the economy, and that certainly will not be bullish for Amazon here in the near future. Now, moving on to Netflix. So the week at 194, ended the week much closer to 199. This stock just continues to inch up higher and higher. This is on the heels of Guggenheim reiterating Netflix as a buy, modeling their advertising revenue boost. Yeah, so I think is starting to get priced into Netflix stock, is the fact that their revenues, not necessarily their profits or their net income, but that top line of revenue over at Netflix, if they bolt on an online advertising business, should go up, and it should actually go up exponentially. And I think that's some of the strength that we're seeing with Netflix. I mean, I think technically, as we'll see here in a moment when we get over to the technical segment of the show, technically Netflix stock was, tremendously oversold after being up over $700 per share and falling down under $200 per share. There's some technical bounce, but I also think from a fundamental perspective as well, you're getting a little bit of buying into the fact that this advertising revenue is going to hit that top line, and it'll make at least the price to sales multiple over at Netflix, it'll compress it even more. Now, after setbacks, Netflix starts starts to focus on its movie strategy. In the past, it appears Netflix had a strategy when it came to movies. In fact, in 2021, they had a new movie every week. They're deciding to scale that back, not necessarily doing more quantity of movies, but bigger, better, and fewer, according to Netflix, and we'll see how that strategy works out for them. Moving on to NVIDIA, started the week at $185 per share, end of the week relatively flat at about $187. Qualcomm CEO says the company would be interested in buying an ARM stake, not the arm off your body, but ARM Holdings, which NVIDIA tried to acquire earlier this year, but in a deal I think that was valued close to about $50 billion. They were not allowed to do that from a regulatory perspective. Obviously, the executives and the people that control ARM, which includes, I think, a majority shareholder stake by SoftBank, they want liquidity. They want to get out of this company. A public IPO, at least in today's market, seems maybe a little slim in the near term. It would be interesting if a consolidation, and even if regulatory environment allows this, but like a Qualcomm and Intel and NVIDIA take like maybe a majority stake in this company. We'll see if that materializes. Certainly will be interesting because, as NVIDIA said, and also the Qualcomm CEO says that ARM is a, quote, very important asset. And if you do 30 to 40 minutes of internet research on ARM chips, they are certainly have huge amount of use cases into the future. That's why if NVIDIA was allowed to buy them, it was incredibly bullish for NVIDIA heading into the future. Moving on to Microsoft, started the week at 271, ended flat right at 270. This is on the heels of pulling in their guidance expectations. This was kind of interesting. This came across earlier this week. It sent the stock from over 274 down to about 265, probably mostly like algorithm trading. I tell you what, if you're programming an algorithm to trade and a company says they're going to cut their Q4 revenue and guidance, well, you're going to hit the sell button immediately. And I think that's happened. But then we saw over the last couple of days this week, the stock basically got all that back. So in some senses, like a weaker back half of the year, I think is kind of priced in with Microsoft. Also, we saw this wasn't like a huge pullback. Okay, they see a $460 million impact from foreign exchange. That is any global company at the current time. They expect earnings to be between $2.24 and $2.32. Previous outlook was $2.28 to $2.35. So just under that a little bit. On that revenue side, expected to between about 52 and 52 and 3/4 billion. On that revenue side, that was about where they were guiding. So Microsoft just tightening things up a little bit. I'm not super concerned with that. Moving on to Tesla, just super volatile this week. Started the week $750 per share, ended the week much closer to $700 per share. This is after Elon Musk. I could just picture Elon Musk this week. He was sitting at home or he was sitting in his office or wherever he does his work, and he fired off a couple of different emails to executives, and you're kind of white collar, not your blue collar that's out there actually making the cars and sweeping the factory floors. This was target this week was the white collar worker over at Tesla. And today he says he wants to cut 10% of those jobs, not the factory jobs, but your executives and kind of salaried employees over at Tesla. He wants to cut 10% of those jobs because he has a, quote, super bad feeling on the economy. Now, this was actually probably even more interesting. The fact that Elon Musk wanted his Tesla execs back in the office. This actually preceded the email that we saw today talking about how he wants 10% of the jobs cut. He fired off an email earlier this week. He said, I want you to work at minimum 40 hours per week at Tesla or leave. He added that this is less than what they ask of their factory workers. So he doesn't want you, if you're a white collar salary employee over at Tesla, you better be working minimum 40 hours a week. It better be at an office, and 10% of you are going to lose your job. This is exactly what you want to see from the CEO, the top leadership spot of a company. If you work at Tesla, if you had one of these cushy jobs where you didn't have to work 40 hours a week and you could do it in the comfort of your own home, is it kind of frustrating? Could you rather go work at Twitter or Facebook or Google, any number of these other companies that are allowing you to sit at home with your dog and your laptop and get your work done there? Certainly from a personal experience, that might be more enjoyable, but this type of leadership, this kind of hard-nosed driving leadership reminds me, quite frankly, specifically of two athletes. And you know I love athlete and kind of sports analogies here on the program. And Elon Musk reminds me so much of the leadership qualities of Michael Jordan and the leadership qualities of Kobe Bryant. Kobe Bryant and Michael Jordan's teammates, coaches, executives, and opponents all hated these two players. If you had to show up and guard these people, you knew you were in for a long night. If you were a teammate of either of these two players, they were going to expect more out of you than you wanted of yourself. It is extremely rare to find that type of leadership. Some people might call this bullying. Some people might call this being hard-nosed and old-fashioned. I call it absolute exceptional leadership that you rarely see. And when you see it, it tends to come from exceptional people. Now, Twitter gained after a regulatory waiting period expired, and that should pave the way for Elon Musk to acquire Twitter at that $54.69 price target, or excuse me, $54.20 price target that Elon Musk agreed to. He's obviously trying to whittle that price down. Twitter, having their shares trading at about $40, are trying to make that sale go through at this point. Cruise granted permit to carry paying riders in San Francisco. So these cruise cars, which I believe are owned at least partially or maybe wholly by GM, are these autonomous vehicle cars, and they're going to start driving around in San Francisco with no driver, and they're going to be able to accept paying customers. This is bullish for obviously GM to a certain degree. I think this is more bullish probably to a Google and a Tesla, which has far more capital resources, in my opinion, to really scale this up. They don't necessarily have to be first to this business. And just broadly speaking, out here in California, especially, this maybe where you live, autonomous taxis might not be a very big market. But out here in California, and even San Francisco in particular, we're talking about billions and billions of dollars potentially in terms of revenue, maybe even potentially profit, but also productivity gains. This is a great thing, in my opinion. Now, electric vehicle stocks gain after China eases some restrictions in Shanghai and Beijing. Obviously, we've been seeing every week there's starts and stops to all the different factories, the Apple factory, the Tesla factories, and hopefully for everybody's sake, including the health situation, we start to see that getting smoothed over. That could also be a tailwind for most of these companies. Now, moving on to the technical segment of the show, kick things off with the S&P 500. Just really briefly, we thought we'd have some kind of rally today off these bottoms. We rallied up here kind of to the middle of this range. Then we just basically stalled out. Like half of the week, we basically stalled out in the middle of this range. Next week, we're looking for confirmation one way or another. Either the bulls take over and push this to the top of the range. I think if you get a push to the top of the range on the S&P 500, and certainly when we look at a lot of these individual stocks, they're all kind of in this same category. If you push it to this top of the range, you could profit take here if you want to. Nobody's ever had a bad day taking a profit from a stock. You could profit take here. It wouldn't necessarily be a buyer of stocks at this point. On the really bull case, so your bull case is this is the bottom. The bottom's in. The recession's not coming. Everybody's overreacting. Well, you need to push up and above, and in this case on the S&P 500, up over 4,600. If you push up over 4,600, at least temporarily, this downward trend is over, and now you're looking for even the slightest pullback to probably get back into this market. I think the higher probability is you walk up here and then eventually get rejected and pull back and make new lower lows. You're either going to do that with a rally early next week, or you're just going to skip the rally and you're going to get to about the middle of the range, which we've done over the past year. S&P 500 has gotten about halfway up the rally zone and then has failed. I would say that's a high probability as well. We fail here. We put up red candles starting next week. You're looking for lower lows down here to nibble on some stocks. We'll talk about that more specifically here in a moment. Now, in terms of the FAANG stocks, we've got Facebook here. This is not doing anything that we haven't already predicted or kind of well telegraphed here on the channel. We're in this downward channel. We're just kind of chopping sideways. We found some support here. I think there's some pretty firm support here. The buyers are defending this kind of 190 area over at Facebook. On the bull case, you're looking to push up above 220. That would take out kind of the previous highs here and at least temporarily kind of eliminate this downward trend. If this downward trend continues, you're probably pushing to a new low low south of, I would guess, $170 per share over at Facebook. Now, Apple's looking exactly like that S&P 500 chart we just looked at. Okay, it's kind of smack dab in the middle of a range. It's pulled back actually more towards the tail end of this week. On the bull case with Apple, you're looking for this to walk up to the top of this range, maybe south, or in this case, north of about $155, $160 per share. A really bullish move would take you out of this channel and would retest these highs up here at 170. Boy, that would be a heck of a move. I mean, we're talking over $30 per share on this one. I think a more logical thing is we actually come down here and retest these lows, which are down here at about $130 per share. You retest back into this box, in my opinion, could be an area where you nibble just a little bit on Apple. Now, moving on to Amazon, we talked about how last week there was a couple stocks. There was Google, NVIDIA, maybe Netflix to a certain degree, but really Google, NVIDIA, and Amazon were really kind of bouncing off levels that really made a lot of sense. And this stock made a hard bounce. So it really confirmed really just one thing, and that is buyers really started to materialize, or in some cases, just the sellers dried up down here at about $2,000 per share over at Amazon. We had a nice rally. Wouldn't surprise me, quite frankly, if you have some really nice green days or maybe even a week in the stock market. This one could comfortably still get back up into the 2,700 level. You have a gap here that I would expect to fill at some point. In my opinion, the really bullish move over at Amazon is a push above kind of this 2,800 level. If you get above that, now all of a sudden 2,750 or so will act as a level of support, which it did for really just a month or two. But it could get us back into the original kind of sideways consolidation that we had with Amazon really for many, many, many weeks. The bear case scenario with Amazon is this was just kind of a dead cat bounce and we pull back down here to 2,000. That's an area where if you like Amazon, you could nibble there. A more bearish scenario is you break through this 2,000 level. I have my sights set on down here south of about $1,800. That would be where I would really want to step in with Amazon, but that's based on my own personal portfolio already being somewhat overweight when it comes to Amazon. Moving on to Netflix, this one is starting to look okay, and it could be maybe Netflix is kind of making the prelude bottoming formation and kind of rebound that maybe some of these other FAANG stocks will do maybe in the couple weeks ahead. The other thing, it could be just completely fake out and might not materialize to much, but you notice with Netflix, it is actually doing exactly what we want the rest of these stocks to do. It was in this, I mean, this was in such a major downtrend. I don't need to show you, but look what it's done more recently, okay? Came down here and now we're starting to make higher sets of highs and higher sets of lows. This looks really good. It looks like it wants to be at least kind of on a beeline back up here north of about $210, $220 per share. Don't worry if you're a little concerned about Netflix or you want to really make sure the momentum is behind this name. I think you could wait all the way if you want to be really safe. Wait all the way up here to 250. I think you've got, I mean, a ton of airspace between that and the other previous price action. You got a huge gap in here from 250 up to about 320. That, in my opinion, is where the easy money is going to be made with Netflix. But in the meantime, starting to look like maybe, at least in the shorter term, a little bit of a bottoming formation over at Netflix. Now, similar type of thing when we're looking at NVIDIA and certainly Amazon as well. They made some like higher lows. You'd like to see this follow through next week with NVIDIA, with Netflix, with Amazon. You'd like to see a push back to the top of the range. So I just showed you though, what's a little bit different about NVIDIA is we're still kind of locked in this downtrend. Okay, we made some highs up here at about 340, made another lower group here at 280. Even if we push back all the way up to about $240 per share, which should still be an incredible move. The stock's at like 190. This thing could push all the way up another $50 or $60 per share and still technically be locked in this downtrend. It really would need to push up over $280 per share, which is over $100 more than where the share price is right now, to really even call off the fact that this downtrend is over. More specifically, I think with NVIDIA, we come up here, there's a small area of resistance, which was support somewhere in this like 210 to 215 range. There's a range right here. I would expect NVIDIA to meet some resistance kind of there and then maybe pull back and retest down here at about 160. I think that can be your buying opportunity when it came to NVIDIA. Now, moving on to Google, this one, just like Amazon, bounced off this $2,000 price level, bounced up to about halfway up a range. We've got some resistance up here at about $2,500. Wouldn't surprise me. Nice momentum heading into next week. No bad news. Wall Street just wants to trap even kind of more bear case rally, like bear market rally money into buying stocks at higher levels. I could see this one walking back up into this range and then getting rejected and coming back down here and retesting these levels back down there at 2,000. That, I think, again, could be a buying opportunity. Moving on to Microsoft, looks a lot like the S&P 500, looks a lot like Apple as well. As you expect, these mega cap companies will trade a lot like the overall market as well. It's pulled into the kind of the middle of this range. Okay, so we have this downward trend, but there's kind of this middle trend as well. We're basically kind of on the tipping point. So you have bears that want to push this market down, and you have bulls that want to say, hey, it's over. Let's get the bull case arguments and get the bull run back. We're basically fighting that. I could see maybe Microsoft pulling up to the 290 level only to get rejected, make another lower sets of lows. You keep making lower sets of lows on this one. It is a buying opportunity, but really the strong buying opportunity for Microsoft is probably south of about, I think I would take a nibble down here at about 240, but you got a better buying zone probably south of about 230 on that one. Moving on to Tesla, this one's actually kind of interesting. It's a little bit different. It depends on, again, when I draw these lines in here, give or take, a couple percentage points on there, because you could easily draw this Tesla line in here and you're not well above it, but you're a distance away from the bottom. But you could also draw this line in up here, and it's telling you that this is actually a buying opportunity for Tesla. But one thing is for sure with Tesla, you get any momentum on this one, you get north of about $900 per share. That will likely trigger some selling. I think this longer term downtrend that has really been intact since late last year, I think that stays intact. We come up here, make another lower high, and then we pull back at least one more time on this stock. I mean, this pattern could go on for quite some time, but let's say it resolves itself relatively quickly within the next maybe 2 or 3 quarters over at Tesla. I could see making one more low down here at about 600, maybe even all the way down to $500 per share. That would be a fantastic buying opportunity. But if you're in this one for the long term over at Tesla, anytime it's down kind of in the bottom of this range, you've also got some sideways consolidation here as well. I wouldn't blame anyone, especially somebody that has a 5, 10, 15, 20 year time horizon with Tesla. This can be an accumulation area south of about $800 per share as well. That was the FAANG Stock Recap Show for Friday. Hopefully you guys have a wonderful weekend. We'll be back again soon next week. Good luck with your investments.